Okay, so here we're at the CapEx input tab. So if you're not familiar with CapEx, I have the summary here. But this summarizes all of your business's capital expenditures. And what is a capital expenditure? So if you think about what your business needs to get going, a capital expenditure is really a large investment made up front. In If you think about it in terms of a product, a consumer product, you can think of CapEx as like plant, property, and equipment. That's really traditionally how you would think about something like this. If you're building a warehouse or a factory or using machinery, that's what CapEx is. But now, with the rise of the online space and building out websites, CapEx for our purposes is really known to be the development of the website. So the development costs are the initial upfront costs that we have to invest in order to get our platform off the ground. And it's usually a pretty expensive thing. And so you want to separate CapEx from your operating expenses, because CapEx, you're realizing this value over several years. So if you're only benefiting from this investment for that year alone, let's say you're only benefiting from this investment for the next 12 months, then it's not CapEx. It's not considered CapEx. That's more operating expenses. That's more of like your daily business operating expenses, things like marketing. That's not something that you're going to realize for years to come. That's something that's a one-time cost, and you're going to realize it, within a few months of your investment into that. So your CapEx is any development, and you depreciate this over time. So here we're using so here on the left-hand side, we have the CapEx, the name of the expenditure or the development costs that we're associating them to. So maybe you have beta application development for 2020. You keep having enhancements every year to maintain your website. And so every maintenance is going to be another row in your CapEx sheet, because you keep investing in this thing that's going to you're going to be able to realize value from it for many years to come, right? So you're not just getting a use from a website for a single year. You're going to find use from this website for a lot of years. You might have to keep adding to it to increase the performance, to increase the functionality, but you'll include those as separate line items here. This is the date that you purchased the development. So maybe it wasn't on one date itself. So maybe it was over a period of time. You didn't have like an upfront cost. So if that's the case, then you can go ahead and break it out into this tab itself. And then depreciation method. So we're using a straight line depreciation. I think there's a few different types, but this one is pretty standard. And then depreciation start date is, we're saying it's a year after when we incurred the CapEx expense. So you can make it that same year, or you can make it a year after. It all depends on the industry that you're in, because the depreciation, it depends on the product that you're building. Some things like if you were to build, some sort of machine to manufacture your products, that would probably depreciate a lot sooner. And so depreciation is basically that this thing is losing value over time. A machine is not going to be in the same great shape as it was the first day that you bought it. Over time, there's just, natural wear and tear that happens to it, and that's where depreciation comes in hand. And so with websites, it's the same thing. There's going to be natural wear and tear, not really like physical wear and tear, but you're going to have to keep updating and maintaining, adding new enhancements and things like that. So that's why we depreciate. So here we have the depreciation start date, which we're starting a year after. Again, look into the industry that you're in to see what like the general standard is there. And then the CapEx life in years, we're saying is 3 years for a website, and that is also pretty standard for websites. But again, look into your own industries and see what the standard is for that if you're not in more of like a web-based company. And CapEx salvage date is the date by which your expenditure has been fully depreciated. So we're saying that it's 3 years after the depreciation start date. So that means it's just 3 years later. So it's March of 2023. And then the monthly periodic depreciation rate is basically just saying what's our purchase amount divided by the 3 years divided by 12 months a year. So this is going to be, it's going to be depreciating at a rate of $7,295 per month for those 3 years of that expense's life. And then the salvage value is going to be nothing, right? We're saying it's fully depreciated and now has a value of 0. Okay, so once you fill in all of this information, then you're just going to flip to this tab and it breaks it out for you. So everything up top here, these are just your application development enhancements. These are your CapEx expenditures. So you'll see this is the first one that we have for beta. This is the one that got added in 2020 for 50,000. This is the one for 80,000. And this is just the beginning balance. PP&E is plant, property, and equipment. So that's just a fancy way of saying CapEx. That's more traditional. Like again, if you're buying any sort of machinery or a warehouse or something like that, that's just a traditional way of saying it. So that's the beginning value of CapEx, and it's basically pulling on the ending PP&E balance. And the way to calculate that is by taking the total of your beginning and all of your additional capital expenditures in that period. So you'll see here we're at 262, 620, and then we add in that additional 50,000 of CapEx, and now it increased, right? So now our ending PP&E balance is 312,620, and that just gets added every month after. However, when the depreciation kicks in, which is going to be what did we say, a year after we purchased, right? So we bought it in March of 2019. A year later, it's going to start depreciating in March of 2020. I also mentioned how we pulled in this periodic depreciation rate. So that's how that number is getting calculated here. And I said that this depreciation will occur every single month for the 3 years. So over 3 years, your equipment or machinery or development is depreciating. So this is the depreciation, and we're using this number up here. So the ending PP&E balance is now going to be taking the total of all of your CapEx, subtracting any depreciation, and then your new remaining PP&E balance will display for the following month. And it'll continue in this way. So you'll see as we incur more CapEx, so here's that 50,000 now, that one gets added over here, that one's depreciating. We have this 80,000, that one gets added over here and it's depreciating, and so forth and so on. So that's the way to read this. You don't have to make any changes to it. This is, just view it, make sure everything looks right and it looks okay, and that's that. And next we will move on to the rest of your costs.